You're listening
to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries. As we discuss current events, financial markets, politics, sports, poking fun at the rest of the media, this is the show that connects the dots of confusion, delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family, your business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it. Guess I got to get the...
Quiet, numbskulls, I'm broadcasting.
We're a little slow there this morning. But yes, I am. And if you ever need any home or finance-related questions, I'm the consumer advocate looking out for you. And again, reach out to me directly, 800-306-1990, 800-306-1990. Let's take a look. What are we going to celebrate today as we close out our Veteran Week celebrations? If you're listening to us right now on the radio, Sunday morning, Go Country, we appreciate you. If you're watching us recording live, we do it every Wednesday morning at 10:30 in the morning Pacific time. Join in. Give us a shout out on any of the social channels that we're on. Go and put a comment in there. We do see them. Sometimes we're able to respond. Sometimes we're not able to respond. But we certainly appreciate it if you can hit the like button or the favorites button or thumbs up. Any of those things we appreciate. It helps us in the algorithms. It gives us our SEO benefits. It also helps us to share more information. We charge absolutely nothing for. In fact, it costs us money to do these broadcasts. And our whole goal is the ability to share information with you and get you some great information all the time and educate. So if you go to our website, ronsiegelradio.com, you'll notice most of the predominant title for everybody on our team is educator. Very, very big on getting you educated. How do you make a great decision if you don't have good education, good understanding of what's going on? So let's take a look for this Sunday morning. It is National Seatbelt Day. Okay, we need to wear our seatbelts. Family PJ Day. If I were wearing my PJs, you're getting scared. So I don't know if we want to do that one. Yeah, not good. National Pickle Day. I like pickles. Dill pickles, half done is the way I like them if you really want to know. And Spicy Guacamole Day. I'm not a big spicy guy, but I love guacamole. So let's go with the guacamole. Not necessarily spicy, but we can go that way. I like that one, so we'll go with that. Take a look and see. We haven't done this one in a while for our friends on Go Country. Gasoline. So as we record this on Wednesday, the national average for a gallon of gasoline, $3.41.7. Our tremendous underwriter, Lori, she's paying $3.16 a gallon. Couldn't do the radio programs without Josh, right? $3.95.8. Josh, you went up again. But you're still better than we are here in California at $4.63 a gallon. $4.63 right here. That's painful. Not as painful as some of the things. Well, I won't even go there. But hey, let's look at what else is going on in the world of real estate. Hey, did you see this? Zillow. A lot of folks are going to Zillow. They love to go to Zillow to get values of their properties. But Zillow now has decided they got into the market of buying property and found out they're not as good at it as they thought. 7,000 properties they have now that they're trying to dump as they close out their business of buying properties. Closing it. Now, if they were so good at understanding the value of property, do you think they'd be closing that division? Probably not. It's probably not what they would be doing if they were great at it. So I'm just going to share with you that if you want great information about your property value, your house, pretty simple. Text SLT Home Digest to 79564. SLT Home Digest. As a gift to you, we'll send you one email every month, and it'll tell you what your property is valued at. Once a month, SLT Home Digest. Get that one. It's totally free. We don't charge a thing for it. Yes, we have to pay for it. Majority of the information comes from a service called Black Knight. They do a great job of getting that data out there. So we're always looking for it. It's there for you. Just go SLT Home Digest. So we got going on. So Zillow out of the business. When you get the digest, it's got that right on there. If you go to our loan app, we've got a great mortgage app. Just goes right on your phone. You can put all kinds of data in there. It's got a great mortgage calculator. RonIsMyLender.com. RonIsMyLender.com. So we've got that one right there for you. That's always got some really good information on it. If you're shopping for a house, the app actually has the data on it right there. So you can put in the parameters of what you want, where you're looking, and every time a new property comes on the market, you're going to get a message right from the mobile app. It's going to tell you exactly what's going on. You know, I digress because I did check this out. You know, Zillow and Open Door and iBuyers, they've come out with these commercials, and their commercials are telling you that there's no commission. Now, I've told you before that anytime you are dealing with a cut rate broker, no commission, or the discounter saying I can do it for $5,000, $6,000, whatever it is, they don't understand marketing, because the commission can be used to market your property, and they're always talking about how much you save in expenses. They don't talk about how much you make in increased price. So I want to share a little bit of that with you this morning. Think about this concept, and I do this in problem solvers all the time. Zillow and Open Door and iBuyer, they have something called an experience fee. Right? That's what they call it.
You know better than that.
So instead of saying commission, it's an experience fee. When Zillow was, just before they shut down their program to buy properties, they showed on there that it's about 10.2% is what they were collecting when they were doing the properties. So they have an experience fee, they have a holding fee, they have a automatic fee for repairs. They just put that right on there and they don't tell you about it. Then they want to know, why is it that people don't trust them? Unbelievable. But take it the next step further. The cut rate brokers. Here's something that they're not going to tell you, and they can't compete because they don't understand marketing. And they just talk about, well, how much your agent is going to make. Okay, so what if I said to you that I've got a team of agents. I am not an active realtor. I'm not a realtor at all. I have a real estate license, had it for about 7 years, don't use it, not qualified. But I understand marketing. So let's think about this. If you have an agent, and it's one of the approved agents from Ron Siegel Radio, and they say to you, I want to set this up so the seller's representative gets paid 4% to sell your property. 4%. Now, I'm going to share with you that in Orange County, California, the price of property, the median home price, is $950,000. $950,000 median home price in Orange County. So what I want to do is I want to say, what happens if we take that $950,000, we say we're going to give the representative of the buyer 4%. That's $38,000. Now these cut rate guys, they can't do that because they're only charging you $5,000, $6,000, $7,000, right? We're saying what are we wanting for that $38,000? We want to attract every single buyer's agent in the area. Every single buyer's agent in the area. When we come back, I'm going to explain more about this to you because I think that you need to understand how that's going to get you more money net. Yes, you pay a little more, but you get more money net. We're going to talk about that when we come back. You're listening to Ron Siegel Radio, discussing real estate, current events, and the financial markets. Reach me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio anytime. At 800-306-1990, 800-306-1990. Real-time real estate, the Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. I'm not going to do a traditional Mortgage Minute today because I want to continue the conversation we had before the break because it ties in with the fallacy of the Zillow and the iBuyer and the cut rate brokers and all that kind of stuff. They just don't understand marketing. So I want you to understand it. Now you can make a decision. Do you want to go cut rate or do you want to get more money out of your property than what they're telling you? So think about this. In the property we were talking about before the break, I was using the $950,000 median home price for Orange County, California. And I said, what if we set up a listing where the buyer's agent gets paid 4% for bringing the winning bid to you? Now, in the marketplace today, the average buyer's agent is getting 2.5% or 3%. On a cut rate side, I don't know, I'm sure getting a lot less than that because they're charging a flat fee. Maybe they're trying to collect the whole fee themselves. I don't know. But here's the issue. If this is done strategically, what I'm sharing with you, if it's done strategically, you're going to have that $950,000 property, the buyer's agent is going to collect $38,000 in commission. Yes, that's a lot of money. But what if they bring you offers that far surpass the offers that you might get otherwise from just doing the old standard way? Doesn't it mean more to you what you get as a net number than what you pay somebody else? Right? So if you've got that $950,000 property and if you've got it marketed the proper way and it brings you $1.2 million, as opposed to maybe that cut rate broker is getting you $1 million. Okay, so maybe they're charging $5,000, and this is costing you maybe $30,000 or $40,000 more than that, $50,000 more than that, but you're collecting $200,000 more. Think about that concept because nobody talks about that side. They say, what's it going to cost you? What's it going to save you? And the real issue is, what are you going to make? So under the scenario that I share when I talk about a 4% commission to the buyer's agent, I talk about a $66,000 commission total. Now, if I got you $200,000 more than what the cut rate broker or the iBuyer or the Open Door, what they're getting you, are you willing to pay $66,000 to get $200,000 more? I'm going to tell you right here, right now. I will write as many $66,000 checks as I can do. Everybody that's listening to me right now, you find me, come to me with $200,000 and I'll give you $66,000 for it every day, all day. You would too. But they're talking about expenses. Well, yes, sometimes it takes money to make money. You got to pay for it. But here's the issue. When you go to that buyer's agent and they know that they're going to make $38,000, they're looking in their database for every possible person they can think of. And maybe they're working with 10 or 20 different people. But now maybe we've got 50 or 60 people when you put it on the MLS and they look at it and they say 4%. Now, they're not supposed to sort by commission, but I'm sure they do. They're trying to take care of their family. They're showing the people every property, maybe not the cut rate brokers' properties. Maybe they're not showing those, or maybe they're burying them in the middle of the home tour because a good salesperson knows the law of recency and primacy. The two properties in the home tour that you're going to remember is the first one you see and the last one you see. The ones in the middle, they're just fluff. Agents know that. So where are they going to put the one that gives them the biggest commission? Again, it's got to be suitable for their buyer. Always got to be suitable. But they're going to schedule it in such a way that you're going to remember the one that they want you to remember, the one that pays them the most money. So now, under normal circumstances, the MLS may get you 10 or 15 people coming to look at your property, marketing it, putting it on the internet, all these different things. You may get 10 or 15. But if you've got 10 or 15 realtors, each working with 10 buyers, now you've got 150 people coming to see your property. If you schedule this properly, if you set this up properly, they're going to come at almost the same time. They're going to see that there's a lot of competition for your house. What does that do? Well, the buyer's representative says, hey, Mr. and Mrs. Buyer, there's a lot of people that want this property. If you want it, you might have to be pretty aggressive to get it. That's how we get the price up for you as the listing agent, as the seller. Now, you're doing that, you get a winning bidder. You have to understand the Ron Siegel Radio appraisal gap program, right? That's an important component because if the appraisal does not come in, it probably will, but if it doesn't come in, you need to know how to deal with that. So you're going to go to RSR Appraisal Gap, rsrappraisalgap.com, or text RSR Appraisal Gap to 79564. And you're going to get that information right there. You're going to tell them that you understand how to deal with the appraisal gap, if there is one, and you're going to get a much higher price from the buyer because they want the property. They know there's a bidding war going on for the property. They know how to deal with the appraisal gap if there is one. And oh, by the way, if there's lots of people bidding on the property as the seller, do you think there's going to be a big request for repairs? Because you can just basically say, no, we're not going to do any repairs. That's not what we're doing. What we're going to do is, if you don't like it the way it is, not a problem. We're going to go to the next bidder. All right, so maybe that's not $200,000 more than what the cut rate people do. Maybe it's only $190,000 more. You still come out ahead. And that's what nobody wants to talk about. They all talk about, because they know that what you think about is expense. So they're not going to talk about revenue, net income to you. I talk about net income to you. I was licensed at Merrill Lynch for a while. Series 6, Series 66. What do? You have to talk about return on investment. I don't have those licenses anymore, so I can really be straight with you. But you talk about, what is your return? What is your return after fees? right? So you got to really be looking at all these different things. It's not just about that headline number that is all sexy when they come at you with it. We want to come out with what's the bottom line to you? How much more did you get on the sale price? How much less did you have on the repairs? Yeah, your commission's going to be higher. Now let's net them out and see who gets you the best pricing. And, oh, by the way, the agents that we've taught how to do this, they even put a guarantee in there. They know that what they're telling you, they're going to guarantee to work. And they'll explain the whole thing with you. You can call me at 800-306-1990, and I can share with you exactly how the guarantee works. It's a great program. I'm going to share with you that if you follow what we've shared with you, it's a great, great program. And, you know, there's no risk to you. How do you have a risk when it's guaranteed? So if you're thinking of selling, give me a call, 800-306-1990. I'll put you in touch with one of the approved real estate professionals of Ron Siegel Radio. I've shown them how to do this. So they get it. Are they going to be the cheapest tool around? Are they going to be cut rate? No. We don't want to be cut rate. We want to get you more money than anybody else will. That's right. That's our mission for you. And that's an elongated mortgage minute brought to you by our friends over at Geneva Financial. I'm going to cut this segment a little short because we got a workshop for our veterans today, being that this is ending our veteran week. And there's so many. Last number I saw, 14% of Americans are veterans, and only like 7% of the veterans use their VA home loan benefit. So we're going to spend some time this morning talking about that VA home loan. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. Yes, and we also have a better outcomes segment when we come back. All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime. At 800-306-1990, 800-306-1990. The Better Outcomes segment today being brought to you by mycdlp.com, mycdlp.com. Continuing on our veterans theme as we close out Veteran Appreciation Week, 2 important concerns regarding the marital home and divorcing veterans. According to Veterans Administration, veterans are more than 60% more likely to separate or divorce than non-veterans. There are many different reasons veteran couples have more marital difficulties than non-veterans. There are stressors like back-to-back deployments while one or both spouses are on active duty, or they are reintegrating into the flow of everyday life after deployments or upon leaving the service, or a non-veteran partner being unable to relate to their veteran and vice versa. These are all possible causes of strife. Adding to the problem, the coping skills veterans learn on active duty are very different from those better suited to intimate relationships, quote, toughing it out, unquote, versus sharing feelings and exchanging ideas rather than giving orders. VA is doing something to help veterans and their loved ones combat these challenges. The Warrior to Soulmate, W2SM program, helps these couples improve communication. They learn healthy conflict resolution skills, expand their emotional awareness, of each other and deepen their connection and intimacy. Now, we do have a website. I can get that out to you if you like. Just give us a call, 800-306-1990. Send us a message on any of the socials. When the marriage is unsalvageable, one area of strife becomes the marital home. Questions arise about who retains the marital home, what to do with the current mortgage, and how the spouse vacating the marital home obtains new housing. Let's address two of the most common concerns with the marital home and divorcing veterans. When the non-veteran spouse retains the marital home, there is usually a common hurdle to overcome: the lack of equity. This hurdle is expected because the house was most likely purchased or recently refinanced utilizing the VA home loan benefit. In addition, VA home loan benefits typically allow for 100% loan-to-value financing, meaning there's not usually a down payment required to obtain VA mortgage financing. Therefore, the only equity growth in the real property depends upon the current market and appreciation during home ownership. Non-veteran spouses are not eligible to obtain new VA mortgage financing on their own. VA home financing is a benefit that belongs to the eligible veteran. So when the non-veteran spouse is required to refinance the existing home, financing into their names, once the divorce is final, they will most likely face challenges of insufficient equity. Not to mention that financing terms may not be as favorable as the existing terms offered with the current VA financing. Two obstacles the non-veteran spouse may face include: one, the added expense of private mortgage insurance, PMI. PMI is usually required on conventional mortgage financing when the primary mortgage exceeds 80% of the current loan-to-value of the real property. Number two, less favorable mortgage interest rates. VA home mortgage financing usually offers advantageous interest rates regardless of the high loan-to-value ratios compared to conventional mortgage financing with the same loan amount leveraged. Unfortunately, when the non-veteran spouse faces these two challenges, they may realize they cannot refinance the current mortgage and remove the veteran spouse from the legal obligation of the existing VA home mortgage financing. Not only will the veteran spouse remain legally obligated for the payment of the current mortgage, but they may also be limited on their ability to obtain VA home mortgage financing to secure a new home for themselves. For the veteran spouse whose name will remain on the mortgage of the marital home financed with VA home mortgage financing, their VA home mortgage entitlement remains tied to the existing mortgage, even though the marital settlement agreement may have awarded the house and assigned the mortgage obligation to the non-veteran spouse. Although the Veterans Administration allows an eligible veteran to have two financed homes concurrently, the veteran may be required to put a down payment on the secondary home, depending upon their second-tier entitlement. There are two tiers of VA loan entitlement: a basic loan and a second tier of entitlement. It is up to the mortgage company how much they are willing to lend to the veteran borrower and how much of a down payment will be required. Eligible veterans in most areas of the United States have a primary entitlement of $36,000 and a second-tier entitlement of $101,062 for a total entitlement amount of $137,062. The Veterans Administration usually guarantees an amount equal to 25% of the mortgage loan amount. For example, if the existing VA loan amount on the marital home is $300,000, $75,000 of the veteran's entitlement is tied to this mortgage. Therefore, there would be a second-tier entitlement remaining of $26,062. However, when the veteran spouse attempts to obtain new VA home mortgage financing to purchase a new home with a loan in the amount of $350,000, the VA will guarantee $87,500, 25%, because the veteran spouse's remaining entitlement is only $26,062. They would be required to have a down payment of $15,360. Therefore, the Veterans Administration would need the veteran to make a down payment of 25% of the difference between the guarantee and the remaining entitlement. Once the veteran's remaining entitlement is determined, another concern that needs to be addressed in the marital settlement agreement is the court-ordered assignment of debt of existing VA home mortgage on the marital home. Because the veteran remains legally obligated to pay the existing mortgage not refinanced by the non-veteran spouse, it may be a financial challenge to qualify for a second home mortgage unless the non-veteran spouse becomes obligated to pay the existing mortgage. In this case, the marital settlement agreement needs to be very clear. The non-veteran spouse will be required to pay the existing mortgage's monthly obligation, including principal, interest, taxes, and insurance. However, when the marital settlement agreement specifically makes the non-veteran spouse obligated to pay the existing mortgage, the current monthly obligation may be omitted from the veteran spouse's debts when obtaining new VA home mortgage financing. Veteran home mortgage financing, first and second tier entitlements, court-ordered assignments of debts can be very complicated during the divorce. A certified divorce lending professional can help clarify and offer strategic divorce mortgage planning to divorcing veterans and their spouses. As a divorce mortgage planner, we as CDLPs can help divorcing veterans make a more informed decision regarding their home equity solutions while helping the professional divorce team identify any potential conflicts between the divorce settlement, home equity solutions, and real property issues. Did you get a copy of the Divorcing Your Mortgage Workbook? All you have to do is go to mydymworkbook.com, mydymworkbook.com, and get your copy. That is the Better Outcome segment brought to you by mycdlp.com, mycdlp.com. So as I mentioned in a prior segment, we're going to do a little chat today about VA home loan financing. I got a workshop for you. So this is brought to you by our friends at Geneva Financial. They've got a great VA home loan program. And as a team, our team, the Siegel lending team at Geneva Financial, we've got rewards. We give you a credit on your closing statement. Every veteran gets a credit, at least $500. So let's talk about the VA home loan benefits. And I will tell you that I've been doing loans for the better part of the last 3 decades. So we've been doing this for a while. We understand it. Today we're going to share who can qualify for a VA home loan, why the VA home loan is the best possible mortgage, the biggest benefits of using your VA home loan benefit. Unbeatable benefits for veterans. It is just beyond me why a veteran would go out and lease a property as opposed to using their home loan benefit. You can use it over and over again. So no down payment is the biggie. So if you go to lease a property, you're going to pay a down payment. I know they call it security deposit, your starting of your lease. But when you're looking at a VA loan, benefit number one, no down payment, absolutely nothing. You can finance up to 100% of the home's price. I like that idea. You're really in it for zero rather than paying 5%, 10%, 20%, or more of the purchase price with the VA home loan. Again, 100% financing of the purchase price. The VA loan is a true no money down loan option. Benefit number two, no mortgage insurance. Typically, lenders require you to pay for mortgage insurance if you make a down payment that is less than 20%. This insurance is known as private mortgage insurance, or PMI, or mortgage insurance premium, MIP, for conventional, and again, MIP for the FHA. This protects the lender in the event that you default on your loan. VA loans require neither a down payment or mortgage insurance. That makes the VA-backed mortgage very affordable up front. Benefit number three, it's a government guarantee. There's a reason why the VA loan comes with such a great terms and no mortgage insurance. The federal government guarantees that a portion of the loan will be repaid to the lender even if you are unable to make monthly payments for any reason. This guarantee allows the lender to offer the VA home loan with very attractive terms and rates. It is, in my opinion, the best loan on the market. Interest rates on this are lower than any other loan that I know of. So it's a great program for our veterans. Benefit number four, a variety of VA mortgages. This means that a VA can have a fixed rate or an adjustable rate. You can also use your VA loan to buy a house, a condo, a new home, manufactured home, a duplex, and other properties. You also have the option to use your VA loan to refinance your existing mortgage, make repairs or improvements on your home, or make your home more energy efficient. A VA-approved lender like us, can help you decide what is the best program, what is in your best interest for your unique goals and objectives. Benefit number 5, easier qualification. Qualification guidelines are more flexible than other guidelines. It's because of the government guarantee. That's the whole reason for it. This is made possible, again, by the VA loan guarantee. The Department of Veterans Affairs wants to make it easy for you to buy or refinance your home. Benefit number 6, closing costs are lower. The VA limits the closing costs that lenders can charge to VA loan applicants. This is another way a VA loan can be more affordable than other types of loans. The money saved can be used for decorating, furniture, moving costs, home improvements, or anything else. Benefit number 7, funding fee flexibility. Easy for me to say. The VA loan requires a funding fee, which is an upfront cost based on your loan amount, type of eligible service, down payment, as well as some other factors. Funding fees do not need to be paid as cash. The VA allows it to be financed with a loan, so nothing is due at closing, and not all VA borrowers pay a funding fee at all. A VA funding fee can be waived for veterans who receive a disability compensation and for unmarried surviving spouses of veterans who died in service or as a result of service-connected issues. You want to check with us, and we'll give you the idea. Once we are able to take a look at the DD-214 and the certificate of eligibility, we're able to give you a better idea as to what the numbers look like specifically in your scenario. Benefit number 8, VA loans are assumable. This means you can transfer your VA loan to a future home buyer if that person is also VA eligible. Assumable loans can be a huge benefit when you go to sell your home, especially in a rising mortgage rate environment. If your home loan today has a lower rate and market rates rise in the future, the assumption features of your VA home loan becomes even more valuable. Let's see. If you want more information, it's pretty simple. Give me a call, 800-306-1990, 800-306-1990. Ron at ronsiegelradio.com. You can reply if you're watching us on any of our channels. Again, just give me a call. We appreciate it. Veterans, we appreciate you for your service. There's a great loan out here. We've got a bunch of educators on our team. We are all anxious to assist however we can. Tony, you're right. The VA loans are the best. I don't know if that's Tony or Victor. One of them came in there, piped in, and said that they're the best. It is the best product out there. We love our veterans, love the VA loans. So give us a call if you are a veteran, if you've served. We've got rewards for you. Like I say, minimum of $500. Some of the realtor partners that we have some various options for you as well. So just give us a call at 800-306-1990. And as always, I ask you, set that first radio preset button so you come back here and listen to us every Sunday morning. We would appreciate it. Every time I say, Josh, every time I do that on Go Country, I get myself mixed up on the message that we're trying to give out there. So Josh cleans it up and makes me look good. But thanks to all of our sponsors. A big thanks to Josh who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people, have a lot of fun, have a great day. We'll talk to you next time on Ron Siegel Radio.
All the things were gone. I worked for all my life, and I had to start again with just my children and my wife. I thank my lucky stars to be living here today, 'cause the flag still stands for freedom, and they can't take that away. And I'm proud to be an American, where at least I know I'm free. And I won't forget the men who died, who gave that right to me, and I gladly stand up next to you and defend her still today. 'Cause there ain't no doubt I love this land. God bless